Welcome to your daily 5 minutes market brief with JP Morgan and Luna. Today is August 23rd, 2025. I am Luna.
I am JP Morgan. We saw U.S. equities just surge, mostly driven by some, pretty unexpected news from the Fed. But there was also a mix of global economic data, some interesting policy moves. So our mission today is to unpack all that and figure out what it means for you. Okay, let's just dive right in. Friday's market action was frankly incredible. What exactly sparked that huge surge? Yeah, it really was something. The main driver, no question, was Fed Chair Jerome Powell's speech at Jackson Hole. You know, the general feeling, the consensus was expecting a pretty cautious tone, maybe keeping options open. But instead, Powell came out surprisingly dovish. That's the key word here.
Dovish meaning leaning towards easier money, towards cuts.
Exactly. More accommodative. He specifically talked about shifting risks, and maybe most importantly, he opened the door pretty explicitly to a potential 0.25% interest rate cut.
A 0.25% cut.
Yep, 0.25%, possibly as soon as the Fed's September meeting. And that just completely reset expectations. Futures markets reacted instantly. The odds of a September rate cut jumped from, maybe 75% before the speech to nearly 90% right after.
90%, wow. Okay, so the market basically heard green light for rate cuts coming sooner rather than later. What did that translate to in actual market moves?
Well, the direct impact was pretty profound, as you'd expect. U.S. stocks surged. The Dow jumped 1.9%, hitting a record high. The S&P 500 climbed 1.6%. NASDAQ was up 1.9%.
Big moves across the board then.
Absolutely. And sectors that are really sensitive to interest rates, like semiconductors, tech stocks, they really outperformed. And look at small cap stocks, they leaped nearly 4%. It wasn't just numbers, it felt like a real shift in risk appetite.
Yeah.
Almost like pulling forward potential gains from next year into one single day.
Okay, and what about the knock-on effects? Treasuries, the dollar?
Right. So indirectly, you saw short-term Treasury yields plunge. That reflects those bets on easier monetary policy coming down the pike. And the U.S. dollar, it weakened sharply, down about 0.9%.
Which usually helps commodities.
Precisely. A softer dollar gave a boost to things like gold, which jumped over 1%. Even cryptocurrencies got a bit of a lift.
It really sounds like just pure market euphoria setting in. But hang on, Powell didn't just give unconditional good news, did he? There was a caveat.
Oh, absolutely. And that's crucial. He was very careful to caution that any further decisions really hinge on the upcoming data, specifically jobs and inflation numbers.
Ah, okay. So the data-dependent line is still very much in play.
Very much so. If inflation, for example, surprises to the upside in the next report, the Fed could definitely still pause on cuts. So while the market reaction was, super optimistic, that optimism is still kind of tied to what the next data points show. Makes you wonder if the market got a bit ahead of itself.
Right, a key point to remember.
Yeah.
So the Fed news clearly dominated, but you mentioned other things were going on. What about the global economic picture? Any important signals there?
Yeah, definitely worth looking at. While the Fed took the spotlight, the global data was, a bit mixed. On the one hand, we saw some better-than-expected flash PMIs for August. That's the Purchasing Managers Index data.
Right. Those give a sense of business activity.
Exactly. And they looked better in the Eurozone, the UK, and Japan. The Eurozone Composite PMI, for instance, hit 51.1. That's actually its fastest expansion in 15 months. So those numbers suggested maybe global demand and output are improving, which kind of added to the positive mood.
Okay, some green shoots there.
Yeah.
But I think I heard something less positive out of Germany.
You did. That's the flip side. Germany's final Q2 GDP estimate, it actually came in weaker than expected, showed the economy shrank by 0.3%. That's a bit deeper than the first estimate.
Minus 0.3%. That's not great.
No, it's definitely a negative signal, particularly for global manufacturers, and it does highlight some underlying fragility there in Europe, even if other areas look a bit better.
Okay, so a mixed bag on the global front. Now, beyond the economic data, there were some policy moves that seemed to come out of left field. Let's talk about that Intel deal first. That seemed surprising.
It really was quite a significant move. The U.S. government announced it's taking roughly a 10% equity stake in Intel.
A 10% stake?
How? By converting about $8 to $10 billion worth of C-Chips Act grants money for building chip factories into non-voting stock.
Wow. So the government is becoming a shareholder.
Essentially, yes, non-voting, but still an equity stake. And Intel stock reacted, jumped about 5% intraday, and it lifted the whole semiconductor sector, too. This feels like more than just helping Intel. It signals potentially a new model, a kind of public-private partnership where the government takes direct equity in strategic industries. Could be a template for other things.
Fascinating. Okay. And then shifting gears completely, China made a move related to rare earths. What happened there?
Right. Also quite unexpected. China's Ministry of Industry and IT basically expanded its existing production quota system for rare earths, but the surprise was they expanded it to cover imports of raw rare earth materials, and they did this without any prior public notice.
Imports too, so they're tightening control even further.
That's exactly how it looks. It effectively tightens China's already pretty strong grip on the global rare earth supply chain. Prices for rare earths jumped immediately on fears about supply constraints. This could mean higher costs, more uncertainty for industries that rely heavily on them. Think EV batteries, wind turbines.
And probably doesn't help trade tensions either.
Definitely adds another layer to that, yeah.
Okay, one more surprising development, this time closer to home in renewable energy. Something about an offshore wind farm.
Yes, also quite intriguing. The U.S. government ordered Ørsted, the Danish energy giant, to halt work on its Revolution wind farm.
Halt work? But isn't that project nearly finished?
It is. It's off the coast of Rhode Island, a $1.5 billion project, nearly complete. The reason given was unspecified national security concerns.
National security. For a wind farm, that's vague.
It is vague, and it puts this huge project in limbo. More broadly, though, it might signal a shift, or at least new questions, about U.S. energy policy priorities. It could potentially, chill investment enthusiasm for clean energy projects in the U.S. if the rules seem uncertain.
What a week. So many different threads, Fed pivot, mixed global data, these really specific, impactful policy shifts. How do we tie this all together? What should we be watching closely next week?
Well, looking ahead, the really crucial release is next Friday, August 29th. That's when we get the personal income and outlays report. And critically, that report includes the PCE price index, the personal consumption expenditures index.
The Fed's preferred inflation gauge.
Exactly. That's the one they watch most closely. So any surprise in that reading, especially if inflation comes in hotter than expected, could seriously swing those rate cut expectations we talked about earlier. It could pour cold water on the market's current optimism pretty quickly.
So keep a very close eye on that PCE number next Friday. It really feels like these last few days highlight just how fast market sentiment can turn, doesn't it?
It really does. How quickly things shift based on policy signals and how interconnected everything is. Geopolitics, domestic policy, the Fed, it all feeds into market moves.
Which leaves us with a big question, I think, for investors, for anyone watching the markets. How do you balance this sudden rush of risk-on feeling, this optimism, with the very real underlying risks? These policy shifts, global tensions, the fact that the Fed's decision isn't actually set in stone yet.
That's the core tension, isn't it? Is the current optimism built on a really solid foundation, or are we just seeing markets react strongly to policy signals, maybe a new kind of policy premium driving things? It's something we'll definitely keep digging into for you.
You've seen the headlines, but what really moves your portfolio? Money.ai scans 1.3 million signals a day, earnings, sentiment, macro shifts, and turns it into one personalized briefing focused on your holdings. No noise, no guesswork, just what matters. Money.ai. Know what moves your money.